global businesses frequently navigate complex tax landscapes, often encountering the challenge of double taxation. This briefing explores how Double Taxation Conventions, DTCs, serve as critical instruments in mitigating these issues, fostering international economic cooperation and legal certainty. We will examine their legal standing, implementation, and ongoing relevance. In jurisdictions where international treaties are duly ratified and incorporated, DTCs often hold a superior legal position to domestic tax statutes. This principle ensures that treaty obligations are honored, providing a stable framework for cross-border transactions. When a conflict arises between a domestic tax law and an applicable DTC, the provisions of the DTC typically prevail. This legal hierarchy is crucial for tax professionals and legal students to understand. It means that the specific terms agreed upon in a DTC can modify or override general domestic tax rules, offering taxpayers and businesses predictable outcomes. This primacy is fundamental to the effectiveness of international tax agreements. For a DTC to have domestic legal effect, it must be formally incorporated into national law. Lawmakers typically achieve this through enabling legislation. This process ensures that the treaty's provisions are recognized and enforceable within the national legal system. There are two primary methods of incorporation: specific and implied. Specific incorporation involves explicitly referencing the DTC within domestic tax laws, often by enacting a statute that gives the treaty the force of law. Implied incorporation treats all duly ratified treaties as automatically part of domestic law, without requiring separate legislative action for each. Each method has distinct legal and practical implications for tax officials and legal practitioners. The implementation of a new DTC necessitates amendments to existing domestic tax laws. These adjustments ensure alignment between national legislation and treaty obligations, particularly concerning tax rates and definitions. Tax officials must meticulously update tax codes to reflect these changes. A key area of amendment often involves withholding tax rates on various income streams, such as dividends, interest, and royalties. DTCs typically reduce these rates to prevent excessive taxation at source. Business owners benefit directly from these reduced rates, which improve cash flow and reduce compliance burdens. DTCs significantly enhance international tax cooperation through provisions for the exchange of information. These protocols allow tax authorities to share relevant data, combating tax evasion and ensuring compliance across borders. This transparency builds trust between nations and strengthens global tax enforcement. Furthermore, DTCs include vital dispute resolution mechanisms, such as the Mutual Agreement Procedure, MAP. When taxpayers face double taxation despite treaty provisions, MAP allows competent authorities to resolve the issue. This provides a crucial safeguard for business owners and ensures the treaty's intended benefits are realized. The dynamic nature of the global economy requires ongoing review and adaptation of DTCs. Policy analysts regularly assess treaty performance, considering amendments to address emerging challenges like the digital economy. This ensures DTCs remain relevant and effective. To maximize the benefits of DTCs, comprehensive education and guidance programs are essential. Tax professionals, business owners, and legal students must be informed about new rules, available helplines, and online resources. This empowers stakeholders to navigate the international tax landscape confidently and effectively. Double taxation conventions are more than just legal documents, they are foundational instruments for international economic stability. By establishing clear rules, ensuring legal primacy, and providing mechanisms for dispute resolution, DTCs foster certainty, fairness, and opportunity across borders. Their continuous evolution, supported by robust legal frameworks and public awareness, is vital for a thriving global economy. Actionable insight: we urge all tax professionals, lawmakers, legal students, business owners, and tax officials to actively engage with the provisions of double taxation conventions. Understand their legal implications, leverage their benefits, and contribute to their ongoing effectiveness through informed policy discussions and diligent application. Your proactive involvement is crucial for upholding international tax fairness and promoting cross-border economic growth.